So suddenly there's quite a bit of interest in gold and silver futures, and that's not surprising. After yesterday's Fed meeting, gold and silver both rallied substantially. Obviously, the markets weren't quite as dovish as the Fed was, or at least the markets weren't expecting the Fed to be that dovish, I should say. Nevertheless, for any reason, gold and silver both moved higher overall. And everybody gets excited. Every time gold rallies, everyone gets excited. They're looking for a repeat of 2011. If you remember, gold rallied all the way to 1900, and that's always in the back of everybody's minds. But the reality is that rarely occurs. That might have been a one-and-done type of situation. Since 2013, gold has basically traded sideways. We really haven't seen much of anything in gold. Here's a weekly chart, and you can see that more or less we've spent most of the time, I should say, trading between 1350 and about 1150. In fact, if you really narrowed it down, the majority of the time was probably spent between 1150 and 1250. So as you can see, there really hasn't been a whole lot going on, although each rally and each sell-off have been pretty exciting. Every time we get up towards the higher end of the range, around 1350, for whatever reason, money starts piling in, and of course that's exactly when the market runs out of buyers. Everything dries up and it rolls over and goes the other way. And I can tell you that every time we get down towards the lows in the 1150, 1100 area, a lot of people that were buying the highs are now being squeezed out and forced out for margin purposes. So unfortunately, that's how range-bound markets work. People tend to be buying the lows and selling the highs, which is exactly opposite of what should be happening. So if you look at a weekly chart, we notice that not only has gold topped out around 1350 to 1360 for the last several years, I can also point out that slow stochastics are rolling over, and stochastics isn't necessarily the most popular indicator, and it's not necessarily one of our favorite, but it has worked really, really, really well on a weekly gold chart, so it's hard to deny that signal. In addition, if you're somebody that pays attention to seasonals, which we do, you will note that June gold futures tend to top out in late February. And if you scroll the clock back a couple of weeks, you'll also note that June gold futures this year seem to have possibly peaked out right around February 22nd. So it's right on schedule for the seasonal pattern. Of course, seasonals are not perfect. Some years they work, some years they don't, but they work more than they don't. So it's not something you should ignore. We also want to point out on a daily chart, if you look at a daily chart, it looks a little more promising than the weekly chart in that it does show some upside momentum. Some of the indicators are still pointing higher. We're not overbought by any means. So it does look like there's some room to run in the short term. But we personally are thinking 1340 is probably going to be about it. Again, with seasonal weakness during this time of year, in addition to all of the technical resistance that we're going to start running into, 1340 should be a pretty strong barrier for gold prices. If we're right, we should see the market make its way towards 1280 and maybe even 1255. So before you jump on the gold bandwagon, pay attention to the risk and reward prospects. We're probably closer to a high than we are a low. And in our opinion, the limited upside leaves bullish trades unattractive. But if you really feel you need to play the upside in gold because the fear of missing out, the FOMO trade, make sure you do it in a conservative manner, or at least a manner that's well hedged. If you don't know who we are DeCarly Trading. We are a futures and options brokerage in Las Vegas, Nevada. If you're interested in trading commodities, we'd love to have you, and we'd love to teach you how. You can visit our website, decarlytrading.com. There are several free videos, educational articles, all kinds of stuff to help you learn to determine whether or not trading is for you, because it's not for everybody. And if you want to go a little further, my book, Higher Probability Commodity Trading, is available at any major book outlet, but it's cheapest on Amazon and free shipping. You can't beat that. So if there's anything we could do for you, just let us know. You can reach us at decarlytrading.com or on social media, Twitter, Facebook, and Instagram. Hope to see you soon.